Hi, welcome to this video in which I go through frequently asked questions in the area of finance. And today's video, we are going to look at depreciation. One asked me, how does depreciation work? And in particular, are the rules of depreciation very rigid or can we do something about it? So let's quickly understand depreciation in a couple of scenarios around depreciation. So the idea of depreciation is pretty simple. You will find it in the profit and loss statement. You'll actually see it not just as one item. It's called depreciation and amortization expenses. That's what you'll find in the summary of the P&L. If you go into the detailed notes, you'll of course see a breakup of the depreciation and amortization. The difference between depreciation and amortization is that depreciation is used for tangible items and amortization is used for intangible assets, right? So assets like software or intellectual property would be amortized and assets like factory and machines and computers would be depreciated. So what does it mean? Yeah, the first area where you'll actually think about depreciation uh, occurs in the balance sheet. Let's say you've bought a fixed asset worth 500,000. So it's 500K is the value of the asset. So that's usually recorded as a gross fixed asset. That's the purchase value of the asset. But because the asset has a certain life, let's say this asset has a life of 5 years, it can be used for 5 years. You don't take the entire 500,000 into the P&L. So that's a level of detail that I won't be covering in this video. And in the P&L, we will only take a depreciation of 100,000. So keeping it very simple, that 500,000 divided by 5 years. So this year's expense is 100,000. Because we have depreciated 100,000, we will add it to an account in the balance sheet called the accumulated depreciation. So that's where the depreciation is being added up. So you have 100,000 as the depreciation accumulation. And therefore, the net fixed asset is 400,000. So at the end of the year, let's assume the asset was bought at the beginning of the year, and by the end of the year, one fifth of it has been used up, and the net the net value of the asset is now 400K. In fact, that's the number you will see in the balance sheet under fixed assets. The fixed assets will not tell you what the gross amount is. The gross amount can be found in the notes where you have the details of the fixed assets. But in the balance sheet summary, you will only see the 400,000 number, the NFA. And this then continues, in at the end of year two, the gross value does not change. It still remains 500K because that's what it was purchased for. Uh, Another 100K depreciation. Now it's accumulated 200K, and therefore the net value is 300. Um, the same thing will now happen year three and year four, and by the end of year five, the entire depreciation is completed. Right? So the net fixed asset has a value of zero. So now this asset is fully depreciated. There is nothing left in terms of as a net value, although the gross value is still 500,000. So let's say this equipment or this asset is useful for one more year, and therefore at the end of year six, what do you find? You'll find that the gross fixed asset is still 500 because it's in the books as a 500,000 asset, but there's no depreciation this year, and therefore the net fixed asset is zero. But you now get to use an asset without any expense, right? So if you're able to stretch the life of an asset beyond its useful life, you get to benefit from it without any expense in the P&L. That's how this would work, and it'll go on till you scrap the asset, at which time you remove it from the asset register. So the gross fixed asset will be taken out, but it doesn't do anything in your P&L because it's already been depreciated. Now, let's look at a scenario where the asset maybe is sold earlier, right? Before the before the useful life is completed. So before 5 years, let's say at the end of year three, we have this situation where now the net fixed asset is 200K, and let's at the beginning of year four, the asset is sold, and it is sold for 250K. So when you sell it for 250K, technically the value of the asset today is 200,000. That's what the balance sheet says, and you sold it for 250. So you have a gain. You made a profit of 50,000, and that will be shown in the P&L as an exceptional gain in that year because you sold an asset worth 200K for 250K. And then at the end of the year, you will obviously remove that asset from your balance sheet, and that asset will disappear from the balance sheet because you sold it. And let's say you sold it for 150K and instead of 250 because it's not usable any longer, or it's almost like scrap. So now the exceptional, it's not a gain any longer, it's a loss because you sold an asset worth 200K. That's what the balance sheet says, but you sold it for 150. So you'll book a loss of 50,000 in the P&L in that year. So that's what's going to happen if you sell the asset before its useful life is completed. It's also look at another scenario that people sometimes have to deal with, which is what if the depreciation schedule has to be changed? Right? So what does that mean? Let's say at the end of year four, okay, this was the original schedule that we saw, but let's say at the end of year four, you realize that this asset could be used for 2 more years instead of just 1 more year. Now, uh, here I think there is some degree of flexibility. You can extend the life of an asset. Of course, there are certain processes to make that happen. But and I have seen examples of companies extending not usually by a year because it doesn't matter. As a company, you may be better off just taking the depreciation in year five and having a zero cost in year six. But sometimes I've seen when the technology gets upgraded, the company may say, let's add 3 more years to the life of the asset. Right? And therefore, what would you do? In this case, let's just say end of year four, you've decided or determined that it's not just 5 years, this asset will be used for 2 more years, right? Till at least end of year six. So you're going to change the numbers for year five and year six. So because now you believe that it has 2 more years of life and the current value of the asset is 100,000, you will now divide this 100,000 by 2 years, and therefore you get a depreciation of 50,000. And so annual depreciation reduces to 50. Instead of doing 100K in year five, you now split it over those 2 years. You could split it over 3 years or whatever the case may be. And then the schedule on the balance sheet side is also adjusted appropriately. So there's some flexibility for the management, of course, with the approvals of the relevant auditors and the audit committee and the board and so on to change the depreciation schedule in the accounts. Although there's a whole separate issue on the tax authorities look at depreciation very differently, and therefore that you may not be able to change. But in your published accounts, it is possible to sometimes change the depreciation schedule. And if I might add, based on another question that I received from one of the participants in my finance program, these are some flexibilities that also can be misused. So by changing the depreciation schedule, suddenly you can increase your profit. Right? For instance, here you can your profit of year five will be higher by 50,000. Earlier you would have had to take 100,000 in depreciation. Now you've taken only 50,000. So you kind of increased your profit in year five by not really selling more or doing something better. You just changed a rule. So these are certain techniques that are used sometimes by companies to play around with their numbers, and that's something to watch out for. And the best place to figure this out is to go look at the notes and all the rules that are described at the beginning or end of the financial statements. I hope you found this video useful. As always, there's a lot more to learn in the area of finance. Particularly if you have never had exposure to finance, it's extremely important for you to build this acumen to grow your career. And therefore, do check out some of the courses that we have on financial acumen. These are designed for beginners, for any manager to build the entire financial acumen towards decision making. And of course, do subscribe to our channel on YouTube so that you can hear and watch more such videos on frequently asked questions in finance.